The labor market is raining on the Fed's parade. So let's jump in, take a look at what's going on. Markets have been a little wobbly today, down currently about 30 minutes to go before the close. Dow down 0.5%, S&P down 1.1, NASDAQ down 1.6 as the market is reversing on a very strong jobs report today. Jobs report showed an increase of 517,000 jobs, crushing estimates as the unemployment rate hit a 53-year low. So we have layoffs across the board, which is reducing the employment rate. Pretty interesting. So this is bringing the debate back to the table that the Fed has a lot of work to do. They're going to have to keep raising rates. They're going to have to stay higher for longer. Earnings have been better than expected for a lot of companies. Facebook, especially, a lot of people expected Facebook to miss. And Facebook instead, it wasn't great earnings, but they didn't miss completely on everything. And we'll take a look at Meta here in a second. Let's pull this up, take a look at what Meta has done as it is, kind of reversing the peak here, got up to 197. That was a take profit for a lot of people, a lot of resistance in this area as people that, bought down here were taking profit along the way. So Meta, jumping exorbitantly, irrational exuberance, as Alan Greenspan coined, in the market with things like this. So this just tells you that when Facebook, it wasn't that great of an earnings report, but it was better than expected, jumps like that. Of course, it was already beat up way down below where it probably should have been anyways. And then I think what triggered this was the buybacks. A lot of people weren't expecting the buybacks. When that was released, bam, off to the races. So that's good for Meta. So here's the Dow right here, still consolidating in this range right here, trying to make up its mind what it's going to do. NASDAQ reversing, rejecting off of this level right here. Let's see what this looks like on a fib from this last high to the last low, just before the 786. So pretty interesting area there for the NASDAQ. Here's the S&P dropping here. Let's see where the S&P reached out to from this last peak here. You can take it right there, just above the 786 before rolling over. And then, of course, if you go from the all-time high and look at where some of these markets have reversed on the S&P, just above the 0.5, and probably about the same for the NASDAQ, maybe a little less for the NASDAQ. Let's see where that ended up. High to low. Yeah, at the 382, never even made it past that as far as the overall range goes. But again, just lower highs, lower lows that the market's continuing to put in. Here's the big news of the day. The VIX found a little bit of a bounce, but still kind of working its way, hanging out at this level. At some point, will probably reverse up when the market loses momentum. The dollar survived this level here, last level of support, found a bounce. We'll see if this is going to, change the trend. So far, the 10-year has bounced a little bit, but still has not quite made it back to this little trend area here that we were watching to see if it can get past that, find support, and continue on back to new highs. And of course, a lot of this is going to depend on what the rest of the earnings looks like. And of course, we're going to get inflation numbers out here soon for January, and we'll see what that really looks like, because that's really the ultimate thing. The Fed's watching the inflation rate, and they're watching the labor rate. Powell came out very dovish the other day. A lot of people were expecting him to talk the markets down. He did not. So that was really interesting. That's why the markets have found some support here. Most interesting thing on Bitcoin, still above all the moving averages. They're starting to turn up with Bitcoin kind of creeping along in this price action that we're seeing here. But let's take a look at the weekly, because again, rejected on the 200-week moving average. That's not good. So if that continues and Bitcoin continues to work its way down, it's definitely going to go back down and test this lower level. But the fact that it could not get above that 200-week moving average, we have this moving average cross, what they call a death cross, 50-week, 200-week. What does that mean? We don't know, because Bitcoin's never had one. All we can do is look at traditional markets. And generally, if we go look at, let's just take the S&P, whenever the S&P is kind of working its way towards one, the NASDAQ is closer. Whenever we've seen these moving averages cross in the past for traditional markets, it generally meant there was a big drop. That was obviously 2008-9 when that happened. It didn't even happen during the pandemic. That was 2008-9 when it happened, because price was declining for a while. To get these averages to cross, that's a sustained downtrend. You ultimately get that last final capitulation. Same thing here in the 2008 2001 area, .com bubble, 50 crossed the 200, a little bit more severe than what we're looking at right now. But when you stretch it out, it kind of flattens out. And you can see at the point of the cross, the market dropped down. Well, let's take a look at what that was. That's when the point across was about right in this area. So let's just say ultimately to the bottom of that trend was about, oh, that's a fib retracement, excuse me. Hit the wrong thing. Let's go for the measurement. So from right about this area here down, somewhere around, I think we looked at this before, about a 40% drop in price right there. Of course, the time before that, let's see, it's only happened a few times in traditional markets, not very often for the NASDAQ. Let's look at the S&P. S&P happened right here during 2008 and 9. That was a big drop. Obviously that was a huge event. And we'll look over here back in 2001, and it crossed right about here. So about 30%. So let's just say these are 30% events, 30 to 40% events when the average is crossed and that final capitulation comes in. Yeah, it looks like about 30% across the board in traditional markets. So if Bitcoin reacts the same, what is that going to mean for price? So let's just pull it up here and let's look at where we are right now. And let's say that average crosses around this area. So 34% puts you around the bottom of the range, 40% puts you down into that 13, 14,000 range. So that's, in the cards. Is it likely right now, given current conditions? The probabilities are fair, given what's going on. If Bitcoin cannot reclaim that 200-week moving average, let's turn that back on. If it does not reclaim the 200-week moving average, then the most likely probabilistic outcome is that it retraces back down to this lower level of the range and reverts back to the low level of the range. If it, obviously if it breaks that, then goes down and starts testing these, longer term macro areas of support in that $10,000 to $14,000 range. And of course, it could sit here and consolidate in this 15 to 18,000 range for a while, because a lot of people didn't sell here. It would take a really bad event to get a lot of people to sell at that area. So that might be a good major level of support here that Bitcoin may not be able to break unless something really bad happens in traditional markets. And if it's a really bad environment like the pandemic type of situation, then we obviously saw what happened to all of the markets during that time frame. Obviously, right here on the Dow, NASDAQ, S&P, and then of course for Bitcoin, the ultimate low was around 4,000. Prior to that, it was 3,500. So in the last 4 years, it's hit that 3,500 to 4,000 level, and it hit 64 and 69,000. So in a worst case scenario, that was a major level of support, macro level of support for Bitcoin. And then in a raging bull market, trillions of dollars pumped into the economy, all kinds of manipulation with the hedge funds and investment funds that have blown up, FTX and the like, leveraging and printing tokens to pump and buy Bitcoin, all of that. And then the major buyers that are no longer in the market propping it up in this area, the Do Kwons and Michael Saylors, just borrowing and buying, they just, those guys are out of the market now. So the question is, can this asset be driven to these levels again without that kind of leverage, liquidity, and ease of borrowing money? So that is yet to be seen, and we don't know, because Bitcoin has never lived in a true bear market, a true risk-off environment, which we are in right now, albeit a little bit of risk on with Powell coming out and being, a little bit positive, a little bit dovish with the markets yesterday or the other day. And, giving the markets kind of the all clear to have some fun before the next meeting and before inflation comes out and things like that. So, markets are obviously volatile, still a lot of work to do. And the question is going to be recession. Are we going to see a real recession? And with the labor market as strong as it is, with the, spending as strong as it is, it's going to take some time for that to happen. So that's one thing that Powell said, was it's going to take time for what they've already done to work through the economy. So far, it doesn't look like it's having any effect. So they may come out, if the economy stays strong and everything, and inflation hasn't moved or even crept up a little bit for January, they could potentially come out with a 50 basis point rate hike. And that would bring markets all the way back to the lows we saw in October. So those are the things I'm looking at. If you're new to the channel, I talk about all things entrepreneurship, real estate investing, real estate development, buying companies, building companies, selling companies, growing and scaling your businesses, your investments, generating cash flow across multiple investments, to reinvest so that you can build that generational wealth, but more importantly, hold on to it to sustain generations to come. So that's what this channel is all about: entrepreneurship, leadership, mindset, starting online, offline businesses, investing in real estate, developing real estate. These are all of the things that I talk about, including the markets and crypto, because a lot of people are investing profits into the markets. And it is still not bull market on yet. The Fed has not given the complete green light. Once they stop, and once they give the all clear, and more importantly, if they do pivot, the market should bottom and will bottom generally after that. And then we can be back off to the races again if we get the Fed juicing the markets with QE. But I don't think we're potentially going to see that. The Fed has QT to do. That will suck liquidity out of the market. We'll talk about that more in depth on another video. But right now, these are the things I'm looking at. I'll see you in the next video.